Today I will reveal the dividends I received in November and why that got me excited. I will also show you how my portfolio performed overall in November, and I'll highlight some companies that did very well during the month. Hi, this is Tom from the Dividend Attitude Show. The portfolio update of November is a bit later, so the portfolio gains shown are not exactly month-end numbers. The dividends obviously are. I will give an update of my portfolio in 3 parts. First, I will show you the companies in my portfolio update with an extensive update on 3 stocks that moved up double digits since last month. An update on the dividends I received in November and how much closer that brings me to my goals. I will also highlight the future purchase which has actually already happened. A little hint, it is a company I have already discussed in a previously popular episode. And at the end I will review my portfolio progress for November and lifetime progress as well. My portfolio still consists of 13 stocks over 7 different sectors, so nothing has changed in that regard compared to last month. I've just added another stock to my portfolio which will be included in the portfolio update of December. So for now I have 3M, Bank First Corporation, Cisco, CVS, General Dynamics, Johnson & Johnson, Northwest Corporation, Omega Healthcare Investors, Qualcomm, Tanger Factory Outlets, T. Rowe Price, PF Corp and Williams-Sonoma. I will reveal the full performance at the end of the video, so stay tuned for that. November was definitely an interesting month. Some companies that made interesting moves this month are CVS. In the October update, CVS was still down almost 24% from my cost basis. Right now it is within $2 of my cost basis, or about 2.6% below, so a huge difference in a month's time here. What happened, you say? Well, the vaccine news definitely helped the stock to be pushed up. In between there was a bit of a dip though, after Amazon announced their entry into the pharmacy business, which is actually old news because that is one of the reasons why CVS acquired Aetna in the first place. CVS was also picked to administer yet another vaccine to nursing homes, which I'm sure helped as well. On top of that, CVS also had very solid results for the third quarter. My personal focus for this stock is to keep an eye on their debt, because the promise made by management was that as soon as the leverage below 3x from the Aetna acquisition came down, dividend increases would resume again. So it is reassuring to see they paid down net debt of $4.75 billion during the quarter, bringing their long-term debt further down. Another big mover to the upside is Tanger Factory Outlets. Was I down 60+% in the last update? Today SKT is at $10.63 and only down 33%. The big thing to watch out for with this stock is rent collection. As a REIT they normally have a predictable revenue stream when rent collections are at normal levels. Due to the current health crisis, the outlets of Tanger have suffered quite a bit, with the initial close down. As stores remain open in the US during the second wave, 99% of the stores are open according to the latest Q3 presentation. 89% of rent was received in Q3 and another 3% is expected to be paid. Another 3% is either deferred or under negotiation. Unfortunately, 5% of rent is not expected to be collected. This is up significantly from the 43% of collected rent in Q2. There are still enough things to worry about, of course, since Tanger has the majority of its outlets in tourist destinations, which obviously is still hit hard even now. Another thing is that the occupancy dropped almost 1% since Q2. But there are also some growth opportunities that we need to keep an eye on. One of them is the flagship project in Nashville. While temporarily suspended, I will keep a close eye on this one since it is essential for the future revenue growth of Tanger. Another positive trend Tanger mentions in their Q3 earnings presentation is that the density around some of their existing outlets has been increasing, which could lead to more foot traffic long term. Another big gainer is Williams-Sonoma, which gained almost 30% since the last update. This is also due to very solid third quarter results. While a lot of retailers are struggling or even going bankrupt, Williams-Sonoma is firing on all cylinders with 24% revenue growth and near all-time high operating margins. Williams-Sonoma already had a strong online presence and favorable customer trends for their products. There's even more good news regarding Williams-Sonoma in the dividend section. And they have also identified 5 factors for future growth with international expansion in India, further growth of e-commerce and the business-to-business market. There's one stock in my portfolio that beats all of these by a mile in terms of month-over-month gains, which is Qualcomm with 55%. I've already done a side-by-side comparison of Qualcomm and Nvidia in episode 39, now suggested, and I'm planning to do a full analysis in a while. If you liked the video so far, don't forget to crush that like button and make it turn blue. If you enjoy videos like this, consider subscribing, because I do a portfolio update every month. Just like last month, November was another month where a new dividend payer paid out. This time General Dynamics, which I purchased right before the last ex-dividend date. After the ex-dividend date, I doubled my position in General Dynamics, so it will bring in even more dividends next time in February. CVS has paid me $12.75 in dividends, which has been the same since I purchased them in 2017. But that $12.75 entirely pays for my phone subscription, which is cool. And then General Dynamics. General Dynamics paid me $1.80 for 2.3 shares I had before the ex-dividend date. Omega Healthcare investors paid me $37.59, and they are due for an increase, so hopefully that will happen next year. Omega Healthcare investors has already paid me $430 in dividends since I held them though, so I'm not complaining about that. Williams-Sonoma also paid me $3.60 for the 8 shares I have, which is a 10% increase since they increased their dividend payout with 10%. It makes me very happy to have these companies that raise their dividends in the midst of this crisis. This is also what I mean when I talk about having a mix of higher dividend yielders like Omega Healthcare investors versus faster dividend growing companies like Williams-Sonoma. But also T. Rowe Price has been generous with dividend increases in the last few years. With those additional dividends coming in, I was paid $55.75, which is an increase of 4% year over year. My forward annual income at the end of November was still at $427, but will increase because I just purchased shares in Store Capital, which I have also covered in episode 33 together with Realty Income. A future video on Store Capital and my reasons for buying is also coming. So like I mentioned last time, I won't be able to meet my goal of $500 annual receive this year. I like to see how much freedom I can buy back with that $340, which I measure by looking at gifted working time. So the time I can buy back with that amount. With $340 in 2020, this equates to 8.5 hours of gifted working time. And now, finally how my portfolio has performed in November and since the start. My portfolio value now stands at $12,609, which is an increase of 27.8% compared to the cost of $9,868. With dividends received, the return is even higher at 37.6%. So it is now back at the levels it was before the current health crisis. Lifetime, I've now received $968 in dividends, so I'm getting much closer to that $1,000 mark. What a difference a month can make because the gains are up a whopping 22% compared to the 15.6% of last month. I hope this video inspired you to keep investing. I also make in-depth stock analysis videos and stock battles, so if you like that, be sure to check that out as well and consider subscribing. Until next time, bye bye.